Our next guest says the bank has been beaten up enough, and it's hard to imagine what more it can do to make amends. For more, we're joined now at Post 9 by Pulitzer Prize-winning New York Times columnist Jim Stewart. I mean, you have been a critic of Wells to give you your fair share, so when you say it's time, why?
Well, first of all, I think my main point is people do these bad things. Individuals do the bad things. The shareholders didn't do it, and the bank in the abstract didn't do it. So I'm all for punishing the people who did it and holding them accountable. And by the way, yes, the bank should pay some fines. But look at this for a second. They paid $185 million to settle the fake account scandal. That was blatant fraud. There were 3.5 million fake accounts. They fired 5,300 people. They paid $185 million. Suddenly we have these auto loans and the mortgage issues, a few 100,000 people affected, and they're paying $1 billion over this? I mean, this is completely out of proportion. They already set aside $4.5 billion last year to cover all these scandals. They have been punished, they have been flogged, they have been publicly humiliated, their reputation has suffered. No other bank is ever going to want to repeat something like this. I'm just saying, it's enough. Don't squeeze it out of the shareholders anymore.
Isn't there a case to be made that the increase in fine is a result of the fact that it's repeat behavior yet again?
Well, you've got to look at the time frame in which this happened. It was all happening at more or less the same time in this pressure cooker atmosphere that the preceding CEO and the head of the community bank, I think, were really responsible for. Now, it is upsetting to me that they got, huge payouts when they left, accumulated stock. You can say, well, they were entitled to it. They clawed back a little bit of it, but they're still looking at tens of millions of dollars they walked away with. Nobody has been charged with a crime, let alone go to jail. I'm not saying send these people to jail, but how about a little community service or something? And the stigma of being held accountable for that, to me, is what is going to deter fraud in the future.
You think this puts a cap on the punishment, absent any further shareholder lawsuits or liability?
I kind of think so. I think this is like a big fat number. I'm assuming that Wells Fargo agreed to this partly because, look, as a bank, when the regulators come down on you, you don't have that much choice, number one. But number two, this big payment, they've got to hope, is kind of the end of this story. This drip by drip, every quarter there's been some horrible new surprise for shareholders. And look at how the stock has performed. Terrible compared to the other big banks.
Although the market is taking it today the way you are portraying it, as sort of over.
I think that's
it
right.
Is well above the performance of the overall sector today.
And I think for investors, a good thing, like the overhead, the management, the masses of lawyers and consultants that they've had to spend on all of this, that will wind down as these things go away, and that should help bring their very bloated cost structure down.
How about growth? If they have to rein in their behavior, so to speak, over time, do they grow in the way we're used to?
Well, they've been capped by the Fed, and that is a serious punishment. The question is, how long will it go? I'd say for a year they can do that, and they can fiddle with their assets a little bit and still show growth in earnings. Beyond that, it's going to really begin to hurt them. But as I said, what more can they do? I think they just go prostrate themselves in front of the Fed and beg for mercy and say, we've done everything you've asked for. Give us a break here, and I think reasonably they should get out of that in a year's time frame or something.
In a year's, yeah. I mean, I'm curious. Do you have any sense as to how dented the franchise has been at Wells, or how long it will take to potentially repair it?
Well, this I think is really interesting. A lot of this you could say, well, let the marketplace evaluate this behavior. Their earnings were really pretty good this quarter, and it looks to me like their customer base is pretty much hanging in there with them. So I don't think it has actually hurt the consumer franchise all that much.
We had a discussion this morning about whether it portends a change in deregulation when it comes to banks. It seems like the administration sort of had it out for Wells for a while, right?
Yeah,
it doesn't say anything about a change in the Protection Bureau and how they go after, how they think of regulation in general.
I don't think that this tough fine here means we're going to have this new era of zealous regulation of the big banks. I think what happened to Wells Fargo is everybody was mad at the big banks. Nobody had been held accountable for the financial crisis. Suddenly, this scandal pops up, and it was brazen, blatant wrongdoing. And then initially, Wells Fargo was acting, oh, this is no big deal. It is a big deal when you make fraudulent accounts and forge people's customers' names on things. So you had clear-cut wrongdoing, and everybody just piled on.
But it is a little bit out of tune with the deregulatory melody, so to speak, that the Trump administration's been playing.
Yeah, but Trump has said, he tweeted that, I'm not for, over-regulating the banks, but when we catch them, we're really going to stick it to them. So it is kind of consistent with that. But, everything I hear is that the pipeline of investigative things is dwindling to a trickle, if that.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.